All right, what's up, folks? Happy Friday, August 8th. Here with our co-host Josh. Josh, how you doing?
I'm doing wonderful. Ethereum hit $4,000 this morning. Who couldn't be happy?
Exactly. We're going to talk about that in a second. But today's crypto report is going to be all about how to manage winners because we have a bunch of them right now, and what is about to happen. I think the first thing I want to talk through really quick is before we get into it is the news that came out yesterday about the executive order that Donald Trump signed based off of the 401k being allowed to buy up the crypto stuff. Is there anything you want to add to that thesis there, Josh, before I kind of dive into the semantics?
Yeah, I think you touched on it on the recent newsletter, but very broadly, it's incredibly bullish for the crypto as a sector and the other asset sectors that are within that executive order as well when it comes to real estate and other items. That is essentially, we talked about it yesterday, constant flow into, likely Bitcoin, Ethereum, those big ETF names, as well as potentially other assets in the crypto universe. And that is kind of, in my opinion, going to change the dynamics of how, uh, you know, crypto bear markets work. More and more we've been seeing on Twitter and kind of hearing from experts that the old way of crypto with 4-year cycles and having these long bear markets where even Bitcoin, but all assets, specifically Bitcoin, goes down 80%. That may no longer be the case anymore, especially with this new executive order from yesterday. Once it goes through, I know it has to go through Congress, a number of government steps to actually make these changes. But if and when that does happen, that will be a massive step for crypto as a win, and yeah, be a constant pipeline into our bags.
I'm going to tell you something because you mentioned it. The newsletter that I sent out to the market research subs was all about don't let crypto be a religion. There's a lot of people out there that they fall into the crypto space and they love it so much that it's like just the hottest thing in the world. They turn their personality to it. Everybody knows these guys. They suck. I was that guy 10 years ago. Nobody likes that guy, by the way. But I will say that you're right. If you go back, historically speaking, these drawdowns from peak to trough post a bull market were brutal. The one that hurt me the most at the time was end of 2017 through the end of 2018, where we saw Bitcoin correct almost 85% over a year. That is insane. And if you were all in on Bitcoin, don't lie to me when I ask you, would you have held your entire stack and continued to buy through during an 85% dip? Because I was there. And do you know how many diamond hands posts were there at the bottom in November of 2018? Not that many. Most people had lost everything. They were mentally fatigued, physically fatigued. They were psychologically fatigued. It was the end. And then, of course, a couple of months later, we started our next big run up into the new highs, right? And you're right. I think with the inflow here of 401ks, it's just a constant bid of passive flows every 2 weeks. It's, when ETFs first came around and then 401ks were introduced to buying ETFs, it was the same idea. Are these ETFs going to be propped up? And the data suggests yes, that every 2 weeks, money flows into these 401ks. They go out and they buy a bunch of things in the market. These ETFs are a main beneficiary of that flow. And now we have crypto space as well. And as a matter of fact, for those of you that aren't already on it, tweeted or didn't tweet this. I wrote about this in the newsletter yesterday, which I highly encourage you to go and check out. It's free. You can get it at newsletter.thetradinginitiative.com. But a flood of capital is coming to crypto. I don't think there's any other way to put it, right? It's not just bullish. This is a structural change. With 401k contributions, it becomes a systematic flow. And another thing that I want to point out is, and you can back me up on this, Josh, they ignore headlines. There's no such thing as noise. They buy every 2 weeks, no matter what. It doesn't matter if you're in a bull market, bear market. Doesn't matter if China just banned it, which was like the latest fake news report that just came out. Doesn't matter about anything. It's the fact that they are there on the bid every 2 weeks relentlessly. So you're right. I don't think that we're going to see the same sort of 80% corrections anymore. I don't think that it's feasible to expect that to happen with all of the passive flows that are starting to come in here. And in yesterday's newsletter, we kind of talked about where our line in the sand was for all of this stuff, and we're going to get into some of the trades that we took off that. But let's shift gears really quick and talk about that. Let's focus on the total crypto market cap. So everything, not just Bitcoin, but everything here. What are we looking at from a total market standpoint? What do we expect to happen, particularly now with this backflow of 401k, all the income coming in off that flow, what do we expect for the market cap to do over the next 6 to 12, maybe 24 months?
Yeah, I mean, very simply explode, right? We are essentially at all-time
Eloquent, but
highs.
yes.
But that's the reality, right? It's that even without the announcement yesterday, the chart looks incredible. We're a couple percent off of an all-time high in terms of total crypto market cap. And, with both of us believing that kind of the next leg of the bull market or the start of a tech-driven bull market, which crypto would fall into that, just, look at the Bitcoin XLK ratio chart. Like this chart's going to explode. And so you can kind of expect us to get to call it 4 trillion in the next let's call it 3 to 6 months if we want to be conservative, but it could happen in a week the way crypto moves, and then from there go to 6 to 8 trillion over that time period, if not higher. I know these passive flows from the 401ks are going to take some time. It has to get approved through Congress and the House, I believe, and so that'll take some time. But once that does occur, yeah, 6 to 8 trillion. I've seen targets for 10, and I don't think that's that fucking crazy.
Let me
For
tell
the
you
entire
something.
state.
Let me tell you something. I'm usually the conservative voice on this report here. When you're the guy that is living in the clouds, and I'm the guy that's trying to bring you back in. And I think there's a happy median for the first time in I don't know how long. I'm going to say you are being too conservative. We're a large cap company away from a $4 trillion market cap. I think we could be there tomorrow if the market wanted it to. It's not that big of a deal. 3.8 trillion right now, 4 trillion, very close to where we are. And with this massive news, you have to ask yourself, obviously financial institutions are already pushing a lot of liquidity into this area, but if they expect 401ks to start, pushing a lot more, these guys aren't here to trade based off of emotions. They don't give a fuck about whether you like crypto. They're here to make money. And if they think they can front run those flows because they can get in at an earlier price and then all of a sudden all of those flows start kicking in and it continues to carry, they're going to. So I would not be surprised if we're at 4 trillion like within the next couple days. I don't think it's going to take three months at all. And I know a couple of weeks ago, I'd asked like, what's your cycle high for the market cap? And you're like, I can see us up in the 6 trillion range, 6 to 7 trillion. And I was kind of pushing back. I'm on board. Fully 100% I'm on board. I think 6 trillion might even be a little too low for this cycle given all of it has nothing to do with my opinion or bias per se. It has to do with the amount of money in the system that will be inevitably, indirectly and directly flowing into this asset class. And I want to point something out for those of you, particularly the older crowd. I'm in my late 30s now. Some of you folks out there are probably in your late 40s, 50s. Some of you are even in your 60s. And so crypto is kind of like, all right, yeah, it's a fun little asset class, and I get that. But if you want to play the macro liquidity trade, if you expect global liquidity to continue to go higher, which you can quantify, you don't have to take my bias or opinion or what I'm saying as fact. You can go look at it. But I'll tell you right now, the way that we look at this, global liquidity is going up, reserve ratios are going down, central banks are printing the shit out of money, inflation is great for risk assets, it might not be great at the end for consumers, but we're not trading the consumer, we're trading the market. And the way I look at this is if you want to be long risk assets that will disproportionately move higher through a global macro liquidity pop, crypto is your best bet, particularly as a retail discretionary trader, because we aren't beholden to clients, we aren't beholden to compliance, we aren't beholden to fucking anybody but us. And we know that crypto is arguably going to move more violently than any other asset class. They're very sensitive to liquidity being pushed into the market. We've seen it over the last 10 years. Every time market cap pops, eventually permeates into the crypto market cap, and you get these insane moves, 1,000% moves and stuff like that. So I'm on board, man. You got me jacked up.
I would even, I would even say, if you go on sites that have more updated total crypto market caps, the true crypto market cap, because total is lagging, they don't add everything in immediately. It's actually currently at 4.95 trillion. And so that 3-month thing was saying the 1.618 fib is about 4.4 trillion. That could be 3 months. But honestly, we could hit that in a couple weeks, no problem.
I'm on board. Let's talk total 3 really quick. This is a big difference between total and total 3. Explain for 2 seconds what total 3 is and what do you expect the market to be rewarding when or if this breaks out to new all-time highs.
Yeah, total 3 is the total crypto market cap excluding Bitcoin and Ethereum. So keep throwing out the two big dogs that make up a massive percentage of total. Total can run to crazy new highs, and a lot of the market can do nothing, just if Ethereum and Bitcoin are performing. So Total 3 is kind of showing us we are at that 2021 all-time high level, and we are kind of retesting it now. We tested it, we went up to it, we got a slight rejection, bounced back down to a 786 fib level, and now we're on the up and up. If we break the previous all-time high set in November, December, January of this year and of 2024 at 1.16 trillion, if you're not pushing max risk into this market with your available capital, I don't really know what to tell you. That is the move, and I think this is going to explode up to 1.64 trillion, and then from there higher, based on Bitcoin and Ethereum. Obviously, if they're doing well, the rest of the market's going to be doing well. This would include things like XRP, Solana, BNB, and then kind of that trickle down effect to large caps, mid caps, small caps, and micro cap coins. So there's definitely an opportunity, and there have been coins, over the last 3 weeks. We talked about one in TTI yesterday that you wouldn't know Ethereum dropped from 3,900 to 3,500, right? It's been up only, and so the opportunities are there. But when this chart caps that 1.16 level, and if you pull up others as well, if that hits a new all-time high, then you need to be pressing max risk into this market to juice your returns. Otherwise, you're missing out.
So we've talked about others a lot on the show, and it's definitely been the lagger of the group. People are consistently looking for alt season. When we have others up, we see where it's currently at, 291 billion. It previously peaked about 7 or 8 months ago, up near 425, 430 billion, up near the all-time high. Is alt season going to commence prior to others breaking out, or would it be within our best interest to simply wait for others to break out and allocate more of our capital towards things like Bitcoin and Ethereum and some of the other blue chips? It doesn't have to just be those two, but things like Ripple and Solana. Should we be waiting to really go out there and push size into these shit coins that are like obscure stuff, or is it worth starting to put positions on now? What is your honest opinion?
I mean, for me, which might be different from others, is I think it's time to put, once Ethereum actually breaks 4,000, then I think you need to be putting risk into altcoins. Each one of these pushes up on the others chart. If we're looking at the last handful of months, we have been putting in higher highs and higher lows. Every time we go from a higher low to that higher high, altcoins explode.
So let's talk about this really quick, because I think some of the people that are listening to this don't quite understand what the correlation between some of these shit coins and Ethereum. So if Ethereum's going up, what is the historical correlation to altcoin season in particular? And why is there a correlation? You know this, but maybe some of the other guys don't.
Yeah, I mean, Ethereum at its heart is an altcoin, right? Bitcoin kind of started, is the crypto market. Things follow that. But very broadly, Ethereum is kind of that risk-on signal. Let's look at ETH BTC. A lot of people talk about Bitcoin dominance and that being the signal for an altcoin season. But if you just line up altcoin performance with ETH BTC, it's a very tight correlation. And so when we see Ethereum exploding, that money kind of trickles down into the economy, the ecosystem of crypto, and allows everything else to flourish. Same way that when Solana was flying over the last 2 years, Solana altcoins were putting in multiples, right?
Yep.
Exactly. You'd have coins literally doing 200, 300% a day. Now, albeit they're shit coins and they're tiny, but that is the point. And so when we look at others like this, we see higher highs and higher lows. I'm personally not waiting for this chart to double before getting exposure. I think if we do break an all-time high, it will be mania and euphoria, right? Like, for context, we're sitting at $202 billion market cap. Total 3 is 1.91 billion, right? It makes up like 10%, is that right? 10% of the 99% of the market makes up 10% of the market cap, right? Like, those top 10 really do influence Total 3, Total 2. And so when people look at that, they go, holy shit, like, why aren't I allocated? Well, a lot of the coins haven't moved yet. You have a lot of coins from 2021 who are still at bear market lows, and we're not trading those names, right? We're looking for those names that are breaking out. They have good setups. They have strength against Bitcoin, strength against Ethereum, strength against Solana. And so, back to your original question, in my opinion, you should be allocating, especially off of these higher lows. When you see this in the chart, you go into your trading view. Ideally, you have a watch list ready. I've shared a custom watch list for folks in TTI multiple times now. It's been updated last week, where you can scan through and see what's showing strength, and then kind of chart those out and take those positions. Because if others goes from current level to all time high, any trade you enter now is probably going to be up 100 to 500%. And I'm trying not to be hyperbolic, but that is the reality, because off of the April lows to now, there are a lot of assets that are up 100 to probably 2,000%.
So let's talk about this really quick, because there's this idea, I don't know. Every trader is going to be a little different. Every investor is going to be a little different. It's, you have to, if you're not willing to take more risk, you're arguably going to make less reward over time. If you're willing to take more risk, you obviously can make more reward, but you can lose more as well. So there's this balance you need to find, and a lot of that comes down to your own emotional aptitude of being able to stomach risk, particularly in the crypto market, stomach volatility. And so essentially, good way to sum this up is there are indications there that this is the time to start pushing a little bit of size, or at least something, get a feeler position in the altcoin market. We're talking like the lower market caps and the spec plays. Everything's a spec play in crypto, but I'm talking like the dirty stuff. And if it starts to work, at least you have a foothold and you can add into it. Your eyes are on the chart, etc. Because there are clues right now that there is something turning. And the big one here that I want to talk about is this Ethereum Bitcoin chart. First things first, before we even get into this chart, I want to point out that I got a funky email yesterday that was like, hey, Hamilton, listen, I like you a lot, but man, you've been talking about Ethereum every week for the last 4 months, and it's just getting old. And to you, sir, I say, go fuck yourself. The reason why I talk about it is because I'm up $1 bajillion right now, and you're not late. If you have not been listening to the ideas that we talk about in the Crypto Report, if you have not been reading the newsletter once per week that says, hey, Ethereum is probably not a bad idea, I don't feel bad for you whatsoever. That was your decision, and I'm going to continue to talk about it because, once again, we opened the Ethereum trade particularly back in early May, right? May 8th was the day where Ethereum really put a stick in. Go look at the chart on the daily. Huge stick, up and over a level. And we said, this is probably something we should look at. We flipped over to the Ethereum Bitcoin chart, this ratio chart, which, by the way, in the crypto space, you can trade this chart. This is not just a ratio chart. You could literally go and trade ETH against BTC. But for analysis reasons, we're going and we're looking, hey, what is the better buy here? Back at the early May, we said, look, does it have to be any more difficult than just buying Ethereum at a previous spot where it found support and started to bounce against Bitcoin for a 2-year run? We said, no, probably not. We see Ethereum with the stick on May 8th. We see it turning against Bitcoin at the same level. We said we should probably start buying Ethereum, and lo and behold, Ethereum is up and over Bitcoin by something like 50% so far since we opened it. The overperformance in Ethereum is insane. And here's the best part, and the reason why I keep talking about it. If, for whatever reason, this rally extends like it did last time, this was almost a 2-year run in Ethereum versus Bitcoin. Ethereum outperformed Bitcoin by 400% over this almost 2-year run. Guess what, folks? You have a long way to go before this tops. So again, if this is the first time you've heard me talk about this, you can still buy Ethereum. As a matter of fact, I'm going to pull it up really quick, and I'll show you how we're trading it in particular. We opened the segment with, hey, guess what? Ethereum is tapping 4,000 for the first time in this year. First time this year. And by the way, before you take over, look at the stick on the weekly, man. We could potentially close at a multi-year high on the weekly, meaning going all the way back to 2021, Ethereum has never been able to stick a high above $4,100. We are very close with another 2 days left to trade. If we break and close on the weekly above 4,000 or 4,100, what do you think's going to happen? I mean, it's just obvious. The 401k flows are here. Institutions are here. Tom Lee is telling you that Ethereum is going to like 400,000. I don't know what the fuck he's saying, but he's the greatest Wall Street cheerleader you could possibly have. And whether or not I believe everything he says, I know that he has a lot of sway over people with money, and they're going to pump it into the market as well. So Ethereum is not just this thing where we're like, hey, this is interesting now. No, it's been interesting for 4 months. We're up $1 bajillion fucking dollars in the Ethereum trade. And the best part is on a absolute basis, we think we're not even into all-time highs yet. Right? There's so much more room for Ethereum to run, so you're not late. I will say you're not early anymore. But once again, to the person that emailed me saying they're sick of hearing about Ethereum, the only thing I can say is, you're a loser if you don't own it. It's just that simple.
Yeah, I mean, a couple points to that. people are going like, oh, okay, well, if Ethereum's gonna run, it's gonna run to 5,000. That's it. It's like that's a handful of percent over its all-time high.
They
If
don't
if
understand market
you're
cycles. It's not going to happen like
well,
that.
but not even that. It's like if people who are saying this who are crypto natives, it's like you've been around, you know what can happen. Why would you think that
You know,
one
that's
of the
a lot of
best
that is
recharge?
PTSD though. You know that it's
Oh, yeah,
Ethereum has fucked so many people in the past that they're done with it. But you know, fuck them. It's totally the problem is that people don't forget fast enough when it comes to losses. They hold grudges against assets, and we know. Fucking man, we've been doing this in TTI for 5 years. If you hold a grudge against an asset and the setup is there and you don't take it, that's the asset that outperforms everything else. And we know it. It's just like it's karma. So yeah, Ethereum. You know, a lot of the guys have PTSD on crypto too. To fuck Ethereum, I don't want to own it. Totally fine. Don't own it. That's fine. Just don't be pissed when it's a $10,000 asset.
yeah, I can agree. And to your point earlier about kind of looking at altcoins, you at this point as well in this cycle, you don't need to go down the risk curve to like the shit coins that are 10 million, right? Like you can buy, we can talk about a trade after this, but you can buy $1 billion market cap coin and still expect massive returns, right? Like Solana's trading at 88 billion, Ethereum's at 480 billion. Last cycle in 2021, you had coins that were between 500 million and 2 billion go between 20 and 60 billion. So if you're still looking for some crazy returns, like you don't, for folks who are a little more nervous about buying coins that have an ADR example of 35%, right? You can go to those assets that are kind of large caps in the crypto space and still see some massive moves. You know, there are tons of assets currently in that range with great setups that we expect to continue to accelerate higher.
I'm going to tell you right now, the if you trade options, first of all, I've traded crypto for a decade. 2015, I was balls deep in it, and waning interest in it back and forth. But obviously, I'm still involved with it. You can make a lot of money in it during certain cycles, and we're in that cycle right now where you're making a lot of money. So your eyes should be there at least part time. But with the introduction of ETFs like IBIT, ETHA, SOLZ, and then some of the crypto adjacent names like BMNR now with Tom Lee, SBET, you have the miners, Riot, Mara, you have a bunch of different ways to play this. You can buy options. Now, I'm not saying that every trade should be an options trade, but the best part about an options trade is you can clearly define your risk when you enter. So, like you said, with an ADR of 35%, which there is no asset that currently has an ETF as far as I'm concerned that has that on the underlying. But still, if the volatility makes you kind of squirmish, go buy a fucking options contract on it. Clearly define your risk. If it doesn't work, you lose that premium you paid and that's it. You don't have to worry about blowing an account unless you fucking YOLO your stuff, which you shouldn't do anyway. And that's exactly what we did with ETHA, right? We bought ETHA back at $18 and we've been sizing in the entire time. We're looking at the highest yearly close on the weekly and we're very close to an all-time high close. The best part about ETHA or SOLZ or IBIT is that you can buy options on these, clearly define your risk and forget about it. If you're of the opinion crypto will go up, at least those three, which they probably will, because it's all a macro liquidity play, you can clearly define your risk and go to sleep happy, not needing to worry about blowing an account. It's beautiful, and the best part, boys, I'm going to tell you right now, the rewards on an options contract in a low IV environment prior to an all-time high breakout are phenomenal. You can make an incredible amount of money trading the underlying options with a relatively small amount of time. I mean, we've owned this since May, and we have options contracts going out to January of 2027 that are already up 50, 60%. We have a year and a half worth of expiration, and they're already almost at 100%. We have January 2026's, December 2025, September 2025's, August 15th, which are coming up in a week. Those things are up like 500-600% still, even after the pullback. It's just a dumb decision not to participate in an asset class that's giving you all of the green lights.
Yeah, I couldn't agree more. And with your point to kind of like taking altcoin trades, for folks who may be listening, whether in TTI or otherwise, if the idea of that makes you nervous, like size down, right? Like you don't have to take a $10,000 spot position in a coin that you don't really know a lot about. And we're talking about TTI. You can use leverage and take a $100 position with a couple X's of leverage to kind of increase that position's go, or just size down from your normal R. Like you don't need to be going in with a full R. especially now as it's really starting to heat up. Once things start going, you can kind of add to those positions or build out larger positions. But if it's a means to get comfortable in the space, especially for those who aren't crypto natives, size down. Like that's totally fine to see the
Unfortunately,
kind of
there's
return.
probably a lot of people listening to this that don't understand what we mean by that, and I don't want to explain it to you. But what I will say really quick is that the number one risk management tool you have as a trader is not a stop loss, it's your position sizing. And Josh is telling you essentially, if you're trading a super volatile asset, all you have to do is just put less money in it. So if you lose less,
Yeah.
but if you make a lot, or if the trade works, you're going to make a bunch of money because volatility works both ways. Okay, we have like 3 minutes. We've talked a lot. I know we're kind of, it's fun right now. The crypto market is fun again. Let's talk 2 seconds about Solana, and then let's. Do you have a trade to share with us today or no?
Yeah, I have a trade. We chatted about it last night in TTI, and I'm happy to go over it today.
So let's talk Solana really quick. We did start establishing a position in Solana. It's pulled back over the last like week and a half, 2 weeks since we started to buy it. Not adding in until we start to clear the one, what is it, 160, 190, 190 area, something like that. Again, I don't want to add more capital, but also, as I said when I opened this, I'm not particularly worried about bottom ticking this trade. People with TikTok brain rot that need to get paid tomorrow, especially if you're over the age of like 30, you're going to lose. You're just an idiot. You buy this stuff and you wait. The money is in the waiting. We've heard that for 130 years, and for whatever reason, everyone retweets it on Twitter. You read it in a fucking book, or yeah, that makes sense. And then as soon as a trade takes more than 2 days, you're like, oh my fucking God. Like, calm down. If you're of the opinion the macro liquidity play is a crypto related name, which we do, buy this stuff and wait on it. Now, obviously, buy it within your risk rules. Don't blow an account if it doesn't work. But Solana is building a base under 260. I believe that when the crypto market breaks out along with total crypto market cap, Solana is just another name that's going to get that flow. And considering it's a relatively smaller market cap than Ethereum, it's going to react more aggressively than Ethereum. I think that's it. I think that it's just as simple as that.
Yeah, I mean, you're totally right. We're looking to not touch this until it gets back above the 181. We had some conversations at TTI because it bounced, around that 200-day moving average level. But being in this range and seeing how we can go top to bottom, it doesn't make sense till we confirm that breakout of the range. So we're not interested in adding to our existing positions until we're above 181. And I mean, talking about Solana and Ethereum, I don't know if you want to pull up the Solana ETH chart, but there's been a massacre. It's pretty brutal. And so if we're looking at strength, we're going to want to see strength from Solana against Bitcoin because at this point, the Sol ETH chart is telling us that.
Bro, is there a better chart right now to explain relative strength and why it matters? There's a reason why Ethereum is our largest crypto position right now, and it's because Ethereum is beating the fucking pants off of Bitcoin and the pants off Solana. It doesn't mean we can't own some Bitcoin in Solana. We do. But the lion's share of whatever portion of your portfolio is buying crypto should be pointed at the asset that's outperforming. And for the last for 4 months, it's been Ethereum.
Yeah, exactly. And so if you're looking at, let's say, hypothetically this week or today on a Friday, you're looking to allocate into crypto ETFs. That's the easiest method for most people listening here. Like, you want to be going on the 4K break for ETH because the Sol ETH chart tells you everything you need to know. The ETH BTC chart tells you everything you need to know. You really don't need to overthink that. If you are going to own one of the 3 big names that are tradable by everyone, Ethereum right now is
We're so
that
early,
trade.
man. We're so early on Ethereum still. The 4K trigger is going to be huge. Okay, let's go through a trade that you're going to bring, and then we're going to call it a session.
Yeah, so it's IPUSD. New launch, I believe this year in February. Available on all exchanges. So for folks using Kraken or Coinbase, you can trade it on there. We put out an initial trade at the 460 level. A handful of us are still in the trade, actually. I use leverage to get into mine. And the trade's up 40%. Like, looking at this chart, since the last, call it 2-3 weeks, since early July, you would not know the rest of the crypto market pulled back. You would not know that Bitcoin and ETH dumped. This chart is essentially up only. And so now we want to buy the all-time high breakout. There are no overhead sellers. RSI just above 70. The chart looks fantastic. And so we want to take this up to the 1.618 fib level. My target's 1051. We're all lighting the load on my position from 460, but this is the opportunity for those who didn't get in at that previous idea to start this kind of all-time high position. Otherwise, for those who already did, you can add a second tranche of trades to take this higher. It's a very clean-cut chart. It's something we trade in equities
Every day.
whenever it appears.
Yep.
Exactly, in a leading sector. And so I think it would be a mistake not to. This isn't a shit coin. For anyone kind of wondering, this is a $1.9 billion market cap coin. It's a layer one, so think Solana, but it does a different kind of function to that. And so, yeah, this is one of the winners we've seen over the last 2 weeks. While everything else drew down 10 to 30% in the altcoin space, a handful of things survived. This is one of them, and we want to buy that strength. If you can pull up IP against Bitcoin, like the ratio IP against Ethereum, it's up only. And yeah.
The way I look at this is it's our IPO-based breakout. For those of you on inside of TTI, you know what that is. We got in with ARM, we got in with CoreWeave, we've got it. Like some of our biggest wins have come from this particular setup. Obviously, can't guarantee that it's going to run the same, but this is the same technical setup, same market structure. As Josh said, for those of you in TTI, all three of our non-negotiables. You throw any sort of moving average on here that actually is applicable. They're not going to have 200 days yet, but you're in an uptrend. You're riding bullish momentum regime. You're breaking out into new all-time highs. The relative strength, momentum are there. For me, triggers 6.5, which were there. Price targets 9, and then 13. Don't think you have to make it any harder than that. And if it continues to run, I have no idea. You can follow the fibs up. But yeah, I mean, this is great. Why would you not, right? Take a stab at this. Relative strength is there. That's the most important thing when it comes to things pulling back. Markets, either pulling back or going sideways. Look for the assets that are outperforming. That's really where the biggest leaders are going to come from when the market all of a sudden shoots back up. There's a reason why financial institutions and traders and whatever are not selling IP when everything else is pulling back. So reasonably, it's expected that these will outperform when the market rockets back upwards, which we're starting to see right now through alts and Ethereum and everything else. So I'm on board, like the IP trade. Josh, as always, thank you. This was a fun session, and hopefully everybody took something good away from it.
Absolutely, it's always a pleasure. And let's see Ethereum break 4K by the end of today and hold it into the weekend.
Yes, dude, let's get the 4K close on the week. I think it's going to be something special. Josh, we'll talk to you again next week. Enjoy your weekend.
You too.
See you, folks.